Hello, traders. Welcome to this week's Stock Profit of the Week update. We are going to discuss Accenture, ACN, stock. Why do we see Accenture, ACN, as the profit of the week? Accenture experienced its worst trading day since March last year, with shares plummeting 7% to $301 despite delivering quarterly results that closely matched analyst expectations. This sell-off wiped nearly $15 billion from the company's market capitalization, marking the stock's fifth worst performance day of the past decade. The primary catalyst for this dramatic decline was CEO Julie Sweet's comments regarding Elon Musk's Department of Government Efficiency, known as DOGE. This initiative specifically targets consulting contracts with companies like Accenture, with Sweet acknowledging that new government business acquisition has slowed, which is negatively impacting our sales and revenue. Accenture's vulnerability to these efficiency measures is significant, with federal government work accounting for 8% of its global revenue and a substantial 16% of America's revenue. With approximately 10,000 employees dedicated to federal contracts and this segment growing twice as fast as the broader business from 2019 to 2024, the potential impact is considerable. The market reaction extended beyond Accenture, with competitors also feeling the pressure. Booz Allen Hamilton shares dropped 8% while IBM fell 4%, as investors reassessed the outlook for companies with significant government consulting exposure. This suggests a broader sector revaluation is underway. Analysts are adjusting their outlook in response to these developments. While acknowledging near-term challenges, many point to the ongoing need for government technology modernization as a long-term factor to consider, with revised price targets reflecting this balanced perspective. Now, let's go to the chart. Looking at Accenture's daily chart, ACN, the stock has established key support levels at $293.35 and $278.46, with resistance levels defined at $315 and $329.88. The price is currently trading well below the 20-day moving average, red line, which continues to slope downward sharply, confirming the strong bearish momentum. This moving average has consistently acted as dynamic resistance during recent price action. Key levels to watch include primary support at $293.35, which appears to be under immediate pressure. A break below this level could lead to a test of more significant support at $278.46. On the upside, the $315 level represents the first major resistance, with $329.88 serving as a more significant barrier that would need to be overcome for any meaningful recovery. The stochastic oscillator is moving upward from oversold territory, suggesting the potential for a technical bounce after the recent sharp decline. However, the overall technical structure remains negative, with the stock making a series of lower highs and lower lows since its February peak. As always, remember to implement proper risk management strategies before entering any positions, particularly given the recent volatility and the stock's reaction to fundamental developments around government contract exposure. That's all for today. See you in the next analysis video.